Obviously, a pretty eye-catching rebound in Bitcoin, getting a lot of the attention, not too far from the springtime highs. Coinbase shares really not doing as much, not matching a lot of that action. What fails to translate perhaps into Coinbase excitement about the platform at this point?
Yeah, I think what ultimately is going to get this stock going a little bit more is if we can get revenue diversification outside of just exchange trading and into some of the other product lines. That we can see that Coinbase can deliver on other product lines, including staking, some of these other areas. They're building out derivatives now. And so that's what I think is really going to get the stock going. For the most part, it's traded a little bit in line with Bitcoin and Ethereum. We've started to see a rebound in Bitcoin here. And we had a little bit of bounce back in the stock, but nothing too crazy here. But I think, part of that also, I think what a lot of folks on the street, the buy side, might be missing is that Q3 volumes are actually going to be shaping up to be pretty strong here. So, Coinbase facilitates trading outside of just the Bitcoin and Ethereums of the world. They also facilitate trading in layer ones like Solana. And we've seen really strong outperformance in those assets over the last 3 to 6 months. So there's been a lot of trading activity in the Solanas of the world, the Avalanche of the world, and some of these other layer ones. And so Coinbase is as much levered to those plays as they are to the Bitcoin and Ethereum, at least on the exchange trading side. So I actually think you're going to shape up to see some pretty strong volume numbers for the platform.
Yeah, talk a little bit about those alternative type, Solana you mentioned, as you call them, layer ones. It seems like where a lot of the enthusiasm is currently being channeled. Why is that, and who is that to the benefit of, principally?
Yeah. So most of why layer ones are starting to get a lot of attention recently is we're starting to see scalability concerns in blockchains, right? So if you're transacting on the Ethereum ecosystem, you can start paying what we call gas fees. And so these gas fees are rising quite a bit. So anytime you do a transaction on the Ethereum network or any settlement layer or layer one network, you're paying these gas fees to process your transaction. Well, those fees have gone up quite a bit recently. And so now you're starting to get other competing Ethereum platforms like Solana, Avalanche, that promise to do more transactions per second at lower costs. And you do see that if you're transacting on some of those blockchains, you do have the lower cost. Part of that is because there's a lot more activity happening on Ethereum, so there is more congestion on that network. But you are starting to see some of these other layer ones actually compete with Ethereum on lower fees. And so there's been kind of a rush, you could call it, into the investable buckets within these Ethereum competitors as market participants want to own potentially the next Ethereum, right? So you're starting to see a lot of activity in those names. And Coinbase lists a lot of those different assets on their platform. So you're starting to see a lot of trading activity in Solana. They recently added Avalanche, which is another layer one Ethereum competitor. And so mostly due to these scalability concerns, you're starting to see that movement, not only in transactional activity on these other layer ones, but also investments as well.
This urgency to find, the more scalable, the less expensive ways to transact, it's to what end at this point? My point is, what are the projects? What are the actual, the business of transacting in these things, aside from trading or arbitrage or, creating synthetic, income-producing products?
Yeah, it ultimately comes down to a few buckets, but DeFi, decentralized apps, and decentralized gaming are big ones right now. So if you want to use a DeFi platform, if you want to take out a loan, if you do want to use a decentralized exchange and transact on them, you're paying these layer one gas fees anytime you interact with that network, assuming it's not on a layer two sidechain. And so because of it, DeFi really can be much more scalable if you get layer one transaction costs much lower, right? The same thing with decentralized gaming applications. If you're using decentralized gaming applications, you want those costs much lower to interact with the game, right? Same thing with NFTs. There's a lot of activity in NFTs. If you're minting NFTs and you're paying sizable transaction costs each time, that's going to become prohibitive, right? So there's kind of those end users, if you will, in decentralized gaming within DeFi and then within NFTs. And in order to get those to really reach scale, you need these layer one settlement layers to have lower transaction costs and higher transactions per second to facilitate that.